Devang Mehta, Senior Vice President and Head Equities Sales at Anand Rathi Securities, joins in live on the show this afternoon. Hi Devang. It is a little tentative trade, nervous trade ahead of two crucial meetings this week. We've got the Fed meeting that kicks off today and decision expected tomorrow. And of course, the credit policy on Friday. Do you expect this nervousness to continue? And what are you hoping to hear from the Fed tomorrow?
Afternoon, Sandeep. Yes, in fact, it's been a dream rally, sort of the market rallying from around 5,200 levels to around, say, 58, 5,900, around 13-14% rally for the equity markets and 8% appreciation for the Indian rupee. So I think a lot of people have been taken aback by seeing this rally and have a sort of a left out feeling. Probably a lot of people wants to enter market at lower levels, so we don't see a very big correction because of whatever the Fed says, because I think the market has already corrected twice for the very same reasons. We hope that the tapering won't be to a greater extent, as well as on the 18th we feel that there will be status quo, but whatever the statements are being made by the new governor would be a thing to watch, and that would take the policy forward. So we feel probably something on the pricing front, as well as a stable monetary policy would be the need of the hour.
Devang, that precisely leads me to my next question. What is the market pricing in from the Reserve Bank governor this time?
I think probably there seems to be not much hope on the rate front, as already we know that 125 basis point repo rate cut has been effected from around in 2012, and this has not been transmitted in the system so far. So I think more than a rate cut at this point, liquidity is of prime importance, and I think a lot of banking stocks, as well as NBFCs and your autos, as well as all your such rate sensitive would be hoping that there can be some liquidity enhancement measures which could probably lead to a lot of such stocks rising. So I think there is not much hope on the rate front at this point, but something on the liquidity front which may help market in the near term.
Devang, we did break the story just a short while ago. I'm not sure if you caught it, but the RBI and the government are evaluating a funding for lending scheme which would allow banks to borrow from the central bank at cheaper than market rates for auto and home loans. This is an attempt to revive consumption demand. Do you think such a move would be beneficial? Do you see that happening? And more importantly, what kind of an impact could that potentially have on the rate-sensitive sectors like auto and real estate?
I think yes, it would be a big benefit surely for autos, as well as your residential companies or home companies, housing companies. We have seen it's an irony that the real estate prices still are somewhere near their high in most of the metros, but the prices of the real estate stocks are somewhere almost at an all-time low. So I think if such a measure bears fruit, then I think the stocks, the real estate stocks like the likes of your DLF, Godrej Properties, and maybe something like M&M, Tata Motors, Maruti, all these stocks could see a fresh round of momentum, and this will give a good boost to the consumption, which has slowed down. And I think this can again revive capex to a certain extent, at least in the auto sector, as well as all your such allied sectors.
Devang, what's the call on IT then? Because one is typically saying that off late you are seeing some profit taking setting into the sector.
I think, Aisha, there needs to be a little bit of profit booking which should be done in the IT sector. And again, while CS is because IT stocks from here can only perform with the market, I don't feel that they can outperform the market in a very big way. And there is risk associated in your banking as well as your BFSI stocks, but more money is to be made out there. So I think IT acted as a safe haven for a long time. It can still act as a defensive, but if somebody who has a bigger risk appetite will not make as big money which he can make in BFSI or such stocks rather than being in IT at this point.
All right, Devang, always a pleasure chatting with you. Thanks for joining in with that opinion on our equity markets.